Greetings, this is Jeffrey Scott. This is my weekend market update, the second part. I titled this, Will Markets Sell the News as Fed Cuts Rates Wednesday? This is my stock review, although I'll do a brief review of the markets first. Again, my name is Jeffrey Scott. I am marketmripro@gmail.com, and my Google group is Top Down Trader. Think about this. The economy is still doing okay. The jobs decrease is concerning, and I think that's what's going to cause the Fed to act. Inflation is still more than the Fed wants it to be, but they're going to cut this week on Wednesday. I don't remember the last time, I'm sure it's happened before, that the Fed cut into all-time highs in the stock market. Does this create a massive rally and massive top into the end of the year before recession hits us in 26? Or has a top been put in and the market sell the news? I think it's going to be an interesting week. We got options expiration week as well. So look for some volatility. My favorite kind of week. This has been a stock picker's year. This is for educational purposes only. Anything I talk about should be taken in the spirit of education. The intent of the video is to demonstrate my tools of top-down analysis. Trading involves risk. You'll own are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I talk about. Hey, I could be preaching my own book. And trading stocks and options should be considered risky. You should always consult with your financial advisor. You may not have noticed on the slide, but I got initials after my name. MD, not RIA or CTA or anything that would give me the rights to teach you or not to teach you, anybody can educate you, but to tell you what to take. I've got tools on multiple platforms and looking forward to the launch of the MetaStock tools. If you're looking for the Wealth Charts video, go to Stocks and Docs tomorrow morning after about 8:30 or wait till you get your email from the folks at becomeabettertrader.com. Live meeting. This is where you learn. I teach. I love to teach. Um, my career in medicine has a lot of teaching in it. Uh, I like teaching people how to trade. I've learned from some great people, and the greatest of them all was probably Ian Woodward, and it's a chance to really expose his brilliance. Of course, I've added a few little touches to it over the years, but to expose people to brilliance that they won't get a chance to expose because he's no longer with us. So something to think about, October 26 and 27. I limit the room to 12 people for many reasons, including the fact that I like to take people out of my boat. Um, 2 days packed of education. I will spend some one-on-one on the software if people have questions. I charge $12.50, includes breakfast and lunch both days, drinks and snacks throughout the day. And then, as I mentioned, I'll take people on a dinner cruise on Sunday Eve, weather permitting. If not, I'll take you out to a good dinner. So the meals are on me from when the meeting starts until the meeting finishes. The hotel is a full service Marriott. I've got the rate at $155 a night. For more information or reserve your spot, please contact me at marketmripro@gmail.com. If you attend and spend $1,250, you will get a rebate commitment for $400. So if you don't have marketmripro.com, you'll get it at whatever the special price is for the meeting minus that $400 rebate. If you've already got it and you want to purchase my TradeStation tools, you can use that rebate for that. And if you have it and you don't want to buy anything else today, you can apply it towards next year's meeting. And then if you really want to be educated, come on Thursday, Tuesday, and on Friday and Saturday, go to John Person's seminar a mile away from mine. His is Saturday and Sunday, mine are Sunday and Monday. My top-down trader group, I've said it before, I don't always post on YouTube. With the upcoming meeting and trying to drive a few more people to come to it, so I at least have enough people in the room so I don't feel lonely. No, we've already got that. Um, But once I don't have anything to promote, I'll probably cut to 3 days on YouTube and the other 2 days in just the group. You get an extra $100 on my tools, except if they're offered at special sales like I did for Labor Day. Love to have you join. And if you're interested in buying computers, I sell late model computers, current model, frankly, and I'm just looking at, right now I got 10 notebooks. I'm under orders to get it down to 6. So I have two 14 inches, a 16-inch, and a high-end 18-inch that I'll be talking about, and I'll send out a notice in Top Down Trader. And if you buy my computers, they come loaded with goodies. So no big deal, but if you're interested, that's another reason to join Top Down Trader. News and earnings, the big flashing light here is the FOMC rate decision. I think it's going to be a doozy response. And then you could see not much in earnings. I actually have Lennar, so this is why I do these programs. It forces me to look, so I know that the rates are going to get cut probably on Wednesday, but I may have to think about lightening up my Lennar position on Thursday or protecting it. There's lots of ways I teach people at the live meeting how to protect their positions. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So I showed this slide on the first video. Let me just talk about what I'm looking for. Now, to be honest, I picked this one because we talked about it last Sunday. In a perfect world, probably wouldn't have this much distance between the tops and the bottoms. And it would be, we would call that tight. Whoops. But what I really liked about this stock is that it exhibited a lot of the characteristics that I look for. I like to see a stock who's in an uptrend on the weekly, and that's the one below. So it's been in 4 weeks, been in an uptrend on the weekly chart. Above two blue bars, so the last 2 days it flipped to an uptrend on the daily chart. Okay, I like that. What else do I like? I like the fact that the high jump is in the middle, so it's not extended. I like the fact that the stock closed on Thursday above the 50, and that was the first time I spotted it because I have a scan to look for crossing above the 50. I like the fact that it had strong volume. And then if you just look at these three dots, now it was a coincidence perhaps that they had volume breakout momentum for each of the 3 days. The yellow line was coming out of a squeeze. Those two momentum dots, which are the dots just above the squeeze, have become my go-to signal. I've now back tested and looked at lots of charts. It is a very good signal, and one, especially in an uptrend that I've been taking. And then the fact that here the relative strength crossed above the moving average, and I'm not looking at like the IBD relative strength. I'm looking at how that stock compares to the spider. And as uptrends begin, typically we cross above the moving average. As downtrends begin, we cross below. And then on the bottom, we have OBV and a moving average also crossing above. So I had a confluence of signals. It was one of my favorite looking charts, and the rest is history. What is very common after you've had a big move is the stock actually pull back a bit. Now, my initial stop was at the bottom of this bar. It's a cheap stock, $5 stock at the time, and I know that I'll never get away with a stop less than 8%. But as someone remarked after I did the video, it's like having a call that doesn't expire. So the other thing that I liked was this green dot, which I'll talk about at my meeting. It's a new signal I added to the program. Not new to me, but new to the program. And when I see a signal I want, I will typically put a buy stop above the high of the day. Why? Because when you get a big up day like this one, it often is followed by a pullback. A big up day often followed by a pullback. Those pullbacks don't mean it's going down. I mean, here was a big move up, and then we pull back, and now we have the next leg. So I have to predict after this bar, we're going to pull back. So I'll set my stop above it. If we go through it, which we did, and we actually had the second dot that we looked for, the fact that we went through it was a great sign. And you can see the two dots now are back here and here, okay, because I advanced it forward. it went through it, and then the next 2 days it really didn't do much. At least the next day it actually um, did a little reversal, which make you nervous, except my stop wasn't anywhere close. And then here it traded a little bit lower, never violated the 50, never got close to my stop down here, and then it bounced. Now, it doesn't look like much in dollars, but you have to buy the same position size. If I'm willing to risk $2,000 per trade, I'm willing to risk a lot more, but let's use that as an example. And let's say my stop was 60 cents away, 2,000 into 60. I could buy 3,300 shares of stock. So if you get a 1 point move or a 2 point move on 3,300 shares, it's real money, especially if it happens very quickly. So why do I buy it? I bought it because it met my confluence of signals and it took out the high of the session. What was the setup? It's the 2 dots and crossing through the 50. All right, buying off of support with a fresh breakout. Where do I place the entry? That's a very personal thing. I always like to put it above for the reason that I mentioned. Let it come to me, because if it trades off, I won't get filled. How do I protect my position? Well, I chose to put it at the bottom of this bar, which is too far away, typically for where I like to put in a buy stop, but it was the lowest of the last four, and it's a cheap stock. I want to give it a little breathing room. And then typically, if I'm risking 60 cents or something, I'll give it at least 2 or 3 times that and have a sell stop up here. So when I hit that, I will take some profits and move my stop up at least until break even. And what did I buy on a cheap stock? I buy stocks. Options don't make sense to me unless you could sell puts on this at at $4 and finance buying something to the long side. The problem with selling um, puts is you're probably going to keep the money and the stock's going to go higher and you'll never get it put to you, and to buy it later it'll cost you a lot more money, but it can finance a long position. Why do you want to come to my live meeting? Because I'll break this out and spend hours on each of those decisions to help you. Now, I'm not holding it this one. This is also Marriott. I used to live right over here. It is an awesome beach. You want your family to love you. Come for the 2 meetings, stay 5 days, 6 days, and park your family during the day over here. It's a little bit more expensive, but it's only about 10 minutes away from my hotel, and your kids and family will love you because it's a great beach. I know, I lived on it. All right, let's go look at the charts. So, brief review. Daily, all-time highs hit on the spider and the Qs and the diamonds on this past week. This is a weekly chart. All-time highs, buy signal. The Russell is getting close. We're not at all-time highs because the all-time high is up here, but we're working our way there. So if you want to be bullish, we are in weekly buy signals, monthly buy signals, all-time highs in the weekly chart in the past week, and it's tough for me to short all-time highs. If you look at the daily, let me take a few seconds. There you go. You could see Friday, you kind of had a reversal candle potentially at a top. All right, a little bit concerning. That was on the spider. NASDAQ got a great looking candle. Inside bar on the diamonds, that could be a reversal. Right now, it just tells me it's consolidating and there's some indecision there. And the same on the Russell. Your daily timing is also green. So from the high end perspective, 30,000 foot view, you're long this market. Now I want to tether your enthusiasm a bit. Let me show you why. We're just going to talk about some of the highlights on each of these visuals. Now, as I show you my concerns, I will again say I think we're higher at the end of the year. My personal opinion, which is worth nothing, because it's opinion, is that we probably pull back a little bit after the rate cut. Maybe we pop and then we drop. But November, December are by far the best months of the year, and typically October is a good month and we turn around there. We're still in some weaker part. Again, This is unusual to me, and I've only been trading for 30 years, but I haven't seen a lot of rate cuts at all-time highs. Just putting it there. Look at the number of stocks in the S&P 1500 that were up on Friday, only 17%. 35 or 33% of the NASDAQ, 27% of the NYSE. So right there is one of my concerns. The breadth is horrible, horrible. The buckets, you could see the gray bars show you that after Thursday, we had a lot of stocks across the markets. This is the NYSE, the NASDAQ, the Russell, the S&P 1500. Each had a lot of stocks above their Bollinger Bands or at the top. They came down dramatically on Friday. And where'd they go? We pushed more and more stocks below. No signal here, but we went from strength to weakness in one day. We look at the basic market breadth, and let me just make those candles bigger. Again, how can you be very bearish when you are one candle off the all-time high on the NYSE and you hit the all-time high on the NASDAQ composite? Um, Things that are going against us, you can see a number of stocks above the various moving averages have come down. The AD lines are not strong here. They were much better the day before. But more importantly, when I look at this one here, I see all-time highs on the three on the corners and recent highs on the Russell. And then I look at the AD lines. AD lines are turning down. Clear divergence of the AD lines on the composite, and probably AD line divergence on the S&P 1500. Those are certain. The stocks above the new highs versus new lows coming down at all-time highs. So why? Everything should be pointing north if we're, if this is a great market with everybody participating. Well, we know that the participation sucks. Now we have bled off the 13-week new high, new low excesses that we had. And those signals only matter when they're above 95 or below 5 is when they tell me the market's going to reverse. If I go and I look at the indexes, the S&P, let's just make this 100. Let's look at 150 bars. All right, so we know the S&P was down or kind of flat, that reversal candle. Notice seasonality on all of these. And you know what, I'm going to go back. Let's just look at 75 bars. How does that look? I can see that better. You can see what seasonality looks like over the next couple of weeks. We've hit the weak part of September. I got to keep that in mind. The Qs closed just off all-time highs. Hard to be bearish there. And they led the markets higher on the week. You could see the diamonds, the ones that had the inside bar on the Russell. And then just to take a look at volatility, looking at VIX futures, it was a positive candle because it's white, up 0.34, but really down at the lows. And then the one thing that's been, I think, supportive of the market rally we've seen has been the dollar. Certainly has helped my gold position. And dollar's down here, can't get above this line, and it fell back to the 50, even though it gapped open on Friday, up only 0.15%. Commodities, commodities have been a big story. You look at it and you see gold bouncing around at all-time highs, silver multi-year highs, although nothing close to the 2011 excesses. What does gold do when you cut rates? Gold goes higher. You would think with EU holding rates and the US lowering rates, the dollar weakens, gold gets even higher. That's why I'm in gold. Oil bouncing around the 50, natural gas is dead to me. And then what we did see a little bit of movement higher on the rates. The 10-year was up 1%, 1.15, and the 30-year was up a bit too, if I remember correctly, 0.5 or so. So rates, though, look how far they've come down. And as far as I'm concerned about rates, as long as the 30-year stays below 5, I'm not too worried. There are many who think that the smart money, the bonds, will not be happy with a rate cut, and 50 points would probably be a problem. And what you might see is the long bond have problems more than the short-term bonds, and you might actually see the long bond weakening, which would cause rates, the 10 years and 30 to go higher, which is not going to be great for mortgages and is not what the Fed, I think, wants to see. Now, when I look at the markets, I did the top-down piece on Friday night, Saturday morning. So let me just talk a little bit about a couple of stocks. So one thing, there is a defect in the program that hopefully will be fixed tonight. The defect is when you import, you're getting two of everything. The other defect is when I delete that, it's supposed to go away, and it's not. So I've already alerted Praveen, and apparently somebody else had the same issue. So if you're having that issue, when you import, you get 2 for 1. That should be fixed. Interestingly, not everything is 2. Some of them, like ABTC, was only a single thing. So that's one thing to be aware of. And again, it's being addressed. So let's stick with the impulse where you only get one of everything. What I really like about the program is that Praveen is built into this drop down. And I've asked him to put in squeeze and squeeze release. A bunch of things. These include trading systems, which are my trading systems. A 2-day Momo up and down, my EMS cross up and down, my multi-time frame CPR up and down, the weekly bullish and bearish reversals up and down, and the dynamic systems long and shorts. Those are trading systems that I have used in other platforms that I've developed over the years. And what is so cool to me, you got 3,759 stocks today, and if I wanted to know how many above 500,000, above the 200-day moving average in a bigger uptrend with a weekly bond go up, add a dynamic systems long signal today. And we're going to find that there's probably a couple. Let's see, come on. So the scans are being done on the server, and you could see there were 35. And this is an early buy signal that I use. You could see the buy signals, that little diamond. And they might meet your criteria, they might not. The first one I think looked the best. AEG, nah. And I will run my scans and I will look to see if there's something I like. I'm looking for stocks that are in an uptrend that have pulled back, something like this that's gone up, pulled back, and now breaking out. But the point is, I've combined trading systems and then a number of filters. Pullbacks and uptrend, retracements and downtrend, bottom fishing candidates, rockets. Price and volume, I picked what I like, above the moving averages. And then looking at 3 moving averages specifically, 1750 and 200, have they pulled back to support and bounced? Have they pulled into resistance and pulled back? Have they crossed above the moving average? Have they crossed down the moving average? Rank over 80, look at IBD relative strength type, relative strength ranking, and how many had a new high in their ranking. And these, you'd expect these to all be some strong stocks here because they've got high relative strength ratings. So they better all look like lower left to upper right. So what I like to do is I like to come in here and I like to hit the 2-day momentum up. Price, volume, I want things above the 200. I want them in a longer term uptrend. I want to hit OK. And interestingly, nothing shows up. So I bet something is here that I don't want here. We try that again. 2-day momentum. If we leave it just 2-day momentum, I've got 35. If I want to limit it to $5 and 500,000 shares, I've got 17. If I want above the 200-day moving average, I've got 12. If I want the longer term uptrend weekly bond go up, I now bring that down to 8. So I had the dynamic systems on as well. That was the problem. So let's look at these stocks. Now let's look at the characteristics here first. How many of them have impulses? I've learned over the years that I want to buy stocks that are not going sideways, but stocks that are moving. Now, this one probably moved too much. Here is a 2-day momentum signal. Here is the squeeze. Um, so coming out of a squeeze, big gap up, I probably wouldn't touch that. Black sky. All right, so I don't know how much of an uptrend. Let's look at the weekly. Well, on the weekly, it's turned up. All right. Other things that would tell me it's in an uptrend is the weekly bongo is blue and the stock is above the 200. So it's in an uptrend. It's had a pretty severe pullback. It's taking out the 50 today. Not bad. I like the volume. I love the signal. Look at the green crossing over the yellow and the white crossing over the yellow. Up here, it tells me it had 3 impulses, which was volume, breakout, and momentum. It has the weekly bongo is in the second week. Excuse me, the daily bongo is 2 weeks long. I guess these are daily, so 1 week on the weekly. It's OBV crossed above 1 week ago, or this first week. 2 weeks of the relative strength on the daily, and the weekly relative strength crossed above 1 week ago. So this looks interesting. I could come over here and look at this and go, ugh, not a lot of earnings, and growth is all over the place. Revenue slowed down. So not my favorite from a fundamental perspective. And I can also look at the news to see why it popped today. So it's Earth Imaging Satellite Company presenting at a conference. Well, I don't know if there's enough there for me to like the stock. What's the next one? ADXN. I love the story. If you had seen it on Thursday and put a buy stop here, you might not be thrilled with me because you didn't get filled until here or up here, and then you probably closed down a bit. But I'm okay with that. But I wouldn't be chasing it today. Why? Too big of a move. Seasonality is bad, and it's got probably 100% on the high jump. SONN. Don't know anything about this, but let's look at a weekly. Hard to say anything. On the daily, it's above the 200. The weekly bongo has been blue for a while. Up here it says for 11 weeks. Okay, maybe that's a good thing. It broke above the 50. I like that. Here's 3 momentum bars in a row. Seasonality is flat. Relative strength OBV. If you like buying cheap biotechs, which are probably news driven and very volatile, that would look okay. QS, this is the one that looks the most like Grab did, in that clearly it's in an uptrend. It did have a big pullback. Tried here, failed, and then it broke back above the 50 on this day. Volume was greater than here, and you got volume, you got breakouts and momentum coming out of a squeeze, relative strength and OBV. That one looked okay. Again, I don't know this company, Neocorp Development. These are cheap stocks, the last couple, but nice uptrend, pull back to the 17 and a breakout. This one probably is more interesting. CAMT, electronic measurements. Look at the volume. So now we have to ask, what the heck's going on here? Earnings were the 11th. No. Earnings were August 5th. They've had, decent above 20% earnings per share growth. Revenue growth is growing above 20%. Its multiple is 26. It pays a dividend of 1.64. All right, was there any news that came out? Notice how this is all here together for you. Private offering, optimistic. You might want to read that. So I click on that and this will come up. You can take a look at that at your own time. So this one might be interesting. And then I've got AMRK. And this one might be the prettiest. You're in a nice uptrend, little pullback to the 50 and a massive breakout. I'd rather buy it in a defined uptrend with the 50 above the 200. It's also, but it looks interesting to me. Relative strength and OBV are great. There's your two momentums in a row coming out of a squeeze. High-low jump, I ignore. Why? Because it just broke above the 200. By definition, if you just crossed the 200, it wasn't a massive move, you're not extended. So that one looks interesting. This is how I look at the stocks. Now I got this big list, and when I showed a big list, someone said that it's hard to know what to do when you show me so many. So let me pick a couple of my favorites. BTDR, Bitdeer Technologies, Bitcoin miners. Um, first thing I would do is stick my little thing right there and say, I got to clear that before I'm interested. But the Bitcoin miners look hot right now. And it had massive volume. It had volume breakout momentum out of a squeeze, good relative strength in OBV. It's at 22% on the high jump. So this one has not gone anywhere. That one I thought was interesting. Data centers still look exciting, and there are a number of energy plays. Now, Vista, I bought it off of this move here. I'm still in it, and I'm kind of flat. You could see it's just come back up to that level. And why do I like Vistra Energies? This is one that's involved in setting up data center energy. Look at it has had some big earnings come into it. Some of that's related to the data center business. Beautiful uptrend, pullback, breakout, took this line out. I'm already in it. A name that people love, and you wonder when the fundamentals catch up with the price and the story. But if you like Palantir, there was a great day to buy it off of here, which would have been on the 8th. But you know what? It looks pretty good still. It broke out, went sideways, and it looks to me like it wants to go higher. So Palantir looked good. Now let me go down and look at RKLB. Now I have to take this thing because that didn't really work and kill it. And now I'm thinking, if I put one of these on, move above there as a fresh breakout. Do you have like a cup and a handle and a breakout coming? Rocket Lab looked good. Century Aluminum, I want to show you a different reason why I have it. Here is a double blue dot. It's got to be the line just above the squeeze line. And that started this run. Here was a double blue dot, and then you had a breakout off over against resistance. I think that one looks very interesting here. And on a long term, there's a cup, a classic cup, handle, breakout. And let's look at fundamentals. Pays no dividend. PE is super small at 7. It's looking for 88 cents versus 46. 88 cents versus 46. That's 42 cents more. That's like an 80% growth rate on a stock that has a multiple of 7. Think margin expansion is real, and I think CENX looks really good. The volatile group are the quantum computers, and Qubit is one of them. And there's more to the dots, but I don't know why this one didn't make it to our chart. So let me just, out of curiosity, let me just look at Momo up because Praveen reviews all my videos. Let's make it by alphabet. Yeah, so it didn't make it on one of the other filters. But look at this. Big uptrend, pullback, breaking out over the 50. Now, fundamentally, these guys are troubling. They don't make money. They have minimal revenue. They trade at a decent negative PE. That's a big PE, minus 70. You're buying the story of the future. Rigetti, quantum computer. There's a number of names out there. I like the fact that it's just breaking above the 50. Seasonality is okay. The double dots for both momentum and breakout, I thought that one looked okay. And one more before we go. Let's see. See if we get that to come up. Uptrend, pullback, and a breakout here. Now, the problem is probably is going to have to clear a couple things. So it has not cleared that, but it will if it trades higher from here. And then the question is this going to be resistance right there? So I'd be careful of this. But the other one that's spelled like this, CVNA, the stock that I just don't know what to do with because I just don't understand how it makes money. Carvana looks interesting, and for the main reason, it's at free parking. I love buying stocks off of free parking. So yeah, too many buy stocks to show you because it gets confusing. But I wanted to show you the patterns that I like, the things that I'm looking at, the systems within the program. We'll get that double input thing fixed. I'm sure it'll be fixed by the time I go to bed tonight. Have a great week in the market. Please be careful. Rate cuts at all-time highs. We'll see you on Monday night.